This is question time. Very excited to be hosting this with everyone today. We've got a ton of great information to get through. We should be live on Facebook, so welcome to all of our Facebook listeners and everyone live here on Zoom. Jessica, I see you. Hello. Joseph, John, Anthony, Elizabeth, Linda, Jennifer, Charles, another James, welcome, good name. Margaret, too many names to keep going through. Welcome everyone. Very, very excited, as I said before, to be doing this. We will try to keep this as tight as possible and have you out of here by the top of the hour. If we do run over time and you've got to run, don't worry. We will be holding this again next week, and we do it every Wednesday. So, feel free if you do need to run off early if we go over time to do so, but I will try and keep it very tight as always. For those of you that haven't joined us before and are wondering what this is all about, very much it's all about you guys getting involved. So, those of you that are live on Zoom today, you've made the right step. This is for you guys to ask us questions about what is going on. And so that you can understand what you should be doing or whether something doesn't make sense to you. The Q&A is open now, so feel free to pop your questions in through the Q&A right now, and we'll get to it shortly. We've got a lot of questions we received over the weekend as well, so if we have a chance, we'll do that. I'm obviously going to give priority to those of you that are here live on Zoom. Unfortunately, it's too hard for us to try and see questions in Facebook Live as well. We will trawl through the recording after and try and come back to everyone who's asked questions there. I'll give a formal introduction to everyone a little bit later, but my name, for those of you that's just joined, is James Maitland. I'm the General Manager here at Salvo. For those of you that don't know who Salvo is or are unsure exactly what we do a lot of things, but ultimately our number one goal is helping people create homes. So whether that be, your first home that you might be buying, perhaps you're upgrading to a new home, could be building a home, could be looking to buy your first investment property, or perhaps looking for help to get a tenant for an investment property, even right down to those of you that might be taking that first step in your journey of home ownership and looking to rent a property for the first time. Anything within that spectrum, that's what we're all about, that's what we're here for, and that's what we love doing. So if that sounds like you, then you are in the right spot. I'm just going to share my screen. So I've got a few slides we'll run through. So just bear with me for a minute. All right. Hopefully that can be seen by everyone. Lucas, just give me a thumbs up. You can see that okay? Great. All right. So as I said, this is question time. A couple of themes that we saw translate during the week. House prices, we're going to talk about international borders. I think it's pretty clear for everyone now that Australia has done pretty well getting through the coronavirus. Vaccinations are rolling out, so that's happening across the globe. So it's not going to be too long before international borders open up again. Property trends and forecasts. How are they done? What do they mean? This is what we love chatting about. Changes in strata laws here in Victoria, big changes. I'm not going to bore you with the detail. We're going to have a quick chat about what they mean for those of you out there in strata. Reserve Bank, are they worried? There's always chat constantly about people saying interest rates are going to have to go up. I don't think they will. There's been a strong commitment for the next 4 to 5 years, but we're going to chat about that a bit more. And obviously this market right now, it is going gangbusters, and what are the signs that are showing us the strength and what we can expect for the rest of the year. All right, we talk about property forecasts, and I think we're going to chat about this a bit more, but I love to just talk about some of these, what we call leading indicators. Capital city auction statistics. We had a clearance rate of just over 83% last weekend. Phenomenal result. Those of you that follow us for a long time will know we're in that territory where we're heading to a very, very strong price increases. As always, the two major cities, Sydney, Melbourne. Sydney is absolutely out of control, almost hitting 90% again last weekend. Melbourne just over 80%. So that is a fantastic result. As you can see, when you compare it to this time last year, significantly stronger, albeit heading into the headwinds of the coronavirus this time last year. But particularly one of the key things here, you can see the volume. Over 800 auctions in Sydney and almost 1,100 in Melbourne. So very, very strong number of auctions taking place over the weekend. All right, what have we seen over the last 7 days? Realestate.com produced this leading indicator, which is what they call the weekly buyer demand. They track on their own website a number of factors as to what they determine mean whether they've got a number of buyers that are engaged. So not just talking about the number of people on their site, but taking certain actions like inquiring, clicking through certain buttons they have there. That all determines whether they say they're an engaged buyer and whether that activity is up. As you can see, it's consistently been heading up over this year, albeit a bit of an up and down. We did see for Australia-wide that overall the demand dropped by just a bit over 2%. What was very interesting, if you can see those lines there, I'm not sure whether this is big enough for you on your screens. The black is everything, the blue is houses, and the red is units. Particularly in Australia, we've seen a slightly stronger strength of people looking for apartments, which flies in the face if you listen to the mainstream, or as our ex-president of the US used to say, the lamestream media would tell you that apartments stink and no one wants them. However, that does not appear to be the case according to realestate.com. And I know all of us on the panel here are big, big proponents of apartments. What does it look like for renters and those investors out there? It hasn't been a great period, over the last 12 months for those of you that are investors. Hopefully we're seeing the tail of it. As always, there's usually a big spike at the start of the year for people looking for rental properties to rent. That spiked, it's steadily sort of decreased down there. However, you can see year on year, it is significantly higher. So I think we're looking about 25% higher for apartments than it was this time last year, and about 15% higher for houses. I mention all the time, it has been tough for investors, but all of those temporary laws are peeling off at the end of this month. So we're excited. All of us on the panel own a number of investment apartments. So we're excited for that balance of power to start coming back to landlords. All right, my question for you, those of you that have done this before, I always like to ask this question. First time callers, I'm really, really focused on you guys. What is more important, information or knowledge? So just take a moment, think about that. Is it information, which is organised data, or is it knowledge, which is an understanding from education or experience? I think I've given you the answer by that. What is it? Jack, tell us the answer.
Knowledge.
That's right, knowledge. Good, you've been listening. We've only been doing this for 12 months. I'm glad you've been paying attention. Why is that? Well, I told you the definition of each. Knowledge is something that is able to take on board all of that information out there and turn it into something that you can use. So you'll hear me talk a lot about what we call actionable knowledge today. It's very much a phrase that we like to talk about here in Salvo all the time, which is how do we sift our way through all of that information and chat, whether it be, the Sunday barbecue, the local real estate agent, the paper, or just people talking on Facebook and Twitter and Instagram as to their views. How do you sift through that, work out whether it's actually important, whether it's from a credible source, and what does it mean most importantly for you, and what should you be doing with that bit of knowledge so that you can set yourself up? That's what it's all about. That's what today is for. It is very, very difficult, as most of you would know. Social media now means that anyone can have a voice and a platform to present their views. There are some fantastic, very experienced and knowledgeable people out there that commentate on those platforms. Just as equally, by about 1,000-fold, there are people that have got no training, no experience, and zero credibility, putting their views out there, and it's up to you to understand who you should be listening to and how to determine an imposter from someone who is real. All right, so I've been chastising everyone now for about 7 or 8 minutes. Who am I? If you didn't catch it before, my name is James Maitland. I'm the General Manager here at Salvo. I've helped create more than 11,500 homes for people over the last 2 decades. Joined on the panel today, I told you we'd introduce everyone. Greg Arbeck, give everyone a wave, Greg, so they can see who you are. He's been doing this for almost 35 years. Jack Gian loves high-rise, loves inner city. Give everyone a wave, Jack. And lastly, to round it out, Lucas Karras, you'll see he looks about 25 years younger than he did. For those of you that have been seeing him before, he splashed out on some new hair dye and he's looking fantastic. So Lucas, give everyone a wave and welcome. All right, I'm going to stop sharing my screen in a moment. For those of you that are not sure how to get involved and you're here live, very, very simple. 2 options: raise your hand and we'll unmute you and you can ask us your questions live on this session today, or alternatively, drop your question in the Q&A and we'll go through it. All right, I'm going to stop sharing my screen and we will get stuck into it. So let me just make sure that's there. All right, I can see everyone, so hopefully those of you on the call can see. All right, so first question up. We were talking about, all the time, Australia has been built, in the last decade on a very, very strong policy of migration, multicultural society. That has obviously dropped off due to the coronavirus over the last 6 to 12 months. Jack, what are we expecting? What's everyone talking about with migration first? Is it coming back tomorrow? Is it coming back next year or in 10 years? What is everyone talking about?
Okay, so the prediction is the migration will coming back after 2023. So the fact is it was true, and because the pandemic and the coronavirus, so Australian, we've been locked down, we've been lost lots of the immigration and from overseas due to the international border being closed. And this will be last year, 2020, will be keep dropping maybe this year to 2021 and 2022 possibly, but after 2023, and definitely we will have like the big positive increase on the migration. So all the migration.
So the obvious question here, migration leads to population growth. Population growth typically leads to more demand for housing. And those of you that remember Year 7 economics would know that when there's more demand than supply, prices go up. How do the callers out there reconcile that if you're telling us that the population growth hasn't been there as it was before, and it's not going to sort of come back for probably another 12 months, yet we've been seeing those auction clearance rates skyrocketing, prices going up. Anyone got any reasons why they can think that's the case?
I think, James, that Australia, we used to have like nearly 240,000 immigration before the pandemic, and we've been lost the migration last year, this year, probably 2022. But as soon as we're coming back with the population growth, immigration, of course, the more demand on the house and the property will coming up. It will playing like at least more than double of the demand than now. Because currently, we were saying like the housing prices goes up and very fast by giving the lower interest rate and also the incentive from the government. But imagine after the international border will be reopened and more demand from the overseas, and will definitely the house will under supply.
Okay, so for those of you that didn't catch onto that, I think we've got strong demand. I think, Lucas, you spoke about this last week, didn't you? That actual demand is significantly higher at the moment than it has been for a long time. So we've got really, really strong demand for housing. In terms of supply, aside from those few lucky people that jumped on Home Builder, there isn't a lot of new supply that's being built at the moment, just some stuff being finished off. And Jack, you're saying once we unleash that immigration again, that's just going to double that amount of demand. It's just going to skyrocket out of control. And we're expecting prices to just keep going up and up and up.
Yes, that's correct. This is 100%. So the migration after we reopen the border will further push upwards of the house price and the property market. This is no doubt, definitely.
All right. Now, I know everyone on the call loves or has your favorite parts of the world. You guys are constantly asking me to sponsor trips for you to go there. I haven't seen so much of the three of you ever in the last 10 years we've been working together than I have in the last 12 months. What's the general consensus from everyone around the globe? Is it the same as what we believe, that Australia is seen as a bit of a safe haven and a shining light in terms of dealing with corona? Lucas, maybe you first. You're part of the world.
Look, 100%. I speak with our agents, our marketing partners overseas, and with buyers, and people can't wait to come here. They see how well we've done, how well we've dealt with it, how quick we were to respond to it, and everybody wants a piece of Australia.
Yep. Greg, India, Sri Lanka, Vietnam, some of your favourite places, China as well. What's the feedback there? Same
again. I talk to my agents on a regular basis, and again we get the same sort of feedback that yes, Australia is looking fantastic, and they can't wait till we can actually come back here and get involved again.
Okay, good. All right, so let's move on from that. I've seen a question here from Janelle asking about the clearance rates and what those second graphs were. I won't go through that again specifically now, but what I do want to ask is, they were forecasts, I guess, or the leading indicators that I touched on before. Jack's just talked about what we're expecting to have happen with house prices. Can someone actually tell us, how do we come up with forecasts? What are the types of forecasts? And can we break it down and someone actually give the people out there the knowledge that we talk about on this topic?
Sure, I'd love to do that, James. Basically, there's two kind of indicators. One is the lagging, and one is the leading. So in plain terms, lagging is things that have happened in the past, historical data that we have, and leading is basically now and prediction to the future. So
if you talk about a lagging indicator, that's not necessarily going to be telling you about what's coming. That's just something that's looking back historically over time. Whereas you're saying that a leading indicator is something that's perhaps happened, here or hereabouts now, but it's an insight as to what to expect in the future.
Yes, and I'll give you a very brief example. Like as the experts say, when you're looking to buy a property in a certain area, trying to have a look at the history, the price growth that happened between 5, 10, 15 years ago, because that is an indication how resilient the market is and how it can withstand to any kind of shocks like financial crisis, natural disasters, etc.
So, those people that brought, pre sort of, what is it, probably 04, 05, 06 in Perth in some of those mining towns, and they're still 15% below water, that's where you'd sort of look back and say, okay, we can see there was a big spike and a massive drop. Perhaps that's not as good an area.
Exactly. And for leading indicators, look, that's sort of more volatile, but it gives us a very good current market indication and helps us predict the future. So number one, the top two leading indicators are interest rates and, of course, the auction clearance rates, which we just spoke about.
Okay. All right. So interest rates, we know, are at all-time record lows. I've been telling everyone to borrow as much as possible. So, I think that's a clear factor, as we always say. We know when it's going to cost you less, what do? You typically buy more. All right. Very interesting. So, we talk about interest rates. Everyone is sort of worried as to what might be happening going forward if house prices keep growing. There's a lot of chat all the time about people sort of saying, some kind of intervention or change in policy needs to occur. Reserve Bank, what are they saying about interest rates at the moment?
Well, at this stage, they're still very adamant they're going to keep interest rates low.
And why do they want to keep it low for so long, Greg?
Well, they want wage growth to grow over time, so that it boosts the economy. By keeping interest rates low, it boosts the economy. Things get better, and then wages grow, and that's what he's trying to make sure that there's sustained growth in the economy by doing that. Yeah.
So I think that's a really interesting point you talk about, and perhaps it gets lost on people in the headlines of house prices are high, increased interest rates. That we have been through coronavirus. There were some significant job losses for people. That the the government's job, and I guess these authorities like the Reserve Bank, is to stimulate the economy as a whole, and that there's still a bit of work to be done in terms of getting the wealth back into people's hands, getting them to spend it, which leads to more jobs, which leads to more wealth, leads to more employment, more investment, which really, the government's invested, what are we at, 100 billion or so in this coronavirus. They're expecting people to get out there and spend that, aren't they?
Absolutely. So that's what it does. When people start getting confident, they see the value of their homes going up, they're seeing the momentum. People then in turn then employ people, they spend money, and it starts growing the economy. That's the intention of it.
Okay. So what is the Reserve Bank sort of going to do then? If they're going to keep interest rates low, are they going to bow to pressure from the mainstream sort of media talking about this, or what are they looking at? What are they worried about?
I think, James, what they're going to just look at is the quality of the lenders. So is not just make sure that the people that are lending money can repay those loans. You're not looking at that. So those are the type of things they'll look at carefully, and make sure that there's some controls in terms of the quality of people that are lending money. So people that are lending.
I assume you mean people that are borrowing, not lending.
Yes, sorry. So people that are borrowing money can actually afford to pay for what the money that they're borrowing. So,
okay. Responsible lending, we know that's getting axed. Is that going to have a factor as well? If you're saying that Reserve Bank's looking at the quality of loans, yet we've spoken about responsible lending, perhaps making it easier to borrow, is that going to be a factor?
I think it's more to do with interest-only stuff, things like that, where beforehand we had people borrowing huge amounts of money. Their ratio of borrowings to equity was too high, and so they're still looking at those things, so that shouldn't have much effect on that at all. No, it's more to do with those high-risk type loans.
Yeah. Okay. And I think too, I remember chatting with Becky the other day, who's not on the call here, but he's one of our finance brokers, that the test rate that they're sort of using for you to borrow a loan is not down at the rock bottom 2%. It's actually at sort of 4 or 5%. Correct. So they're factoring in interest rate rises, isn't it?
What they're doing is going, all right, interest rates are low, but we're factoring in, should the interest rates go up, which they may do after 3 years, can this person still afford to pay the loan? If that is coming out good, they will lend the money. So they are putting those provisions in, yes.
Yeah. Okay. So it's not just a free-for-all. There's still a fair bit of structure and control there. All right. Okay. Lucas, you've been chomping at the bit. I know you want to tell us through. Market is going gangbusters, as we said. We talked about it many times. It was only 12 months ago that it was doom and gloom. Everything was going to crash. Why is it so positive? What is it with everyone's love affair with bricks and mortar?
Well, first of all, you just said that we all love bricks and mortar. But then when you sort of add to the mix, global pandemic, ban on international travel, even ban domestically, we couldn't go. We got lockdowns, working from home, government incentives, lowest interest rate, just to mention a few of things. No wonder housing has become such a hot commodity. Even the biggest skeptics were predicting, like you said before, prices to fall by up to 30%. Now they're all turned around, every single one of them. And now they're saying there's going to be an increase of 10%, and this is going to happen for the next 3 to 4 years. James, Australia currently is experiencing the speediest post-recession recovery that we've ever seen.
So, we do this every day. This is what we love. We sort of just, without even having a system, we just sort of know and understand it. But perhaps can you give a bit of insight to everyone on the call today? What are some of those factors out there that people can sort of understand for themselves or look out for and see that give them a bit of an indication about how strong the market is, and in terms of how long it might continue at such a strength?
Okay, I'll give you some of the sort of indicators that are showing us. So number one, we're seeing that the home values are rising at lightning speeds. Like I mentioned before, mortgage rates, government incentives, it's sort of low supply, it sort of helped boost the housing market. And we saw an increase in February of 2.1%. Now, that is the largest month-to-month change recorded since August 2003. Houses increasing the fastest rate in 17 years, James.
Okay.
So there's your number one. Number two, clearance rates, which you very, which you mentioned at the beginning of our session. We're seeing more than 80% clearance rate, and not just in one or two cities, but we saw it happening in Sydney. We saw more than 80% in Melbourne. And for those that are not in Melbourne, we had a long weekend. Now, traditionally, when you have a long weekend, it's the quietest time, but we still managed more than 80% clearance rate. Brisbane, more than 80%. Adelaide, more than 80%. Perth, more than 80%. So it's Australia-wide, not just some specific area.
Okay. All right. Give us a couple more. I know you've got a big list. Give us a few key ones.
I was hoping you'd tell me that. So our data is showing us that more than 30% of purchasers are now buying multi-million-dollar properties virtually without even ever stepping foot inside the property. So that's
you're saying they're just looking at it on the internet and signing a contract without even seeing it.
Just in a pretty picture.
Okay.
And that's it. So, which can be dangerous at times, but this is the market
I'm not
we're
sure
in
I'd
now.
recommend to anyone doing that out there on the call, but
that's why I mentioned that there.
What else?
Now, look, we've seen a lot of cases where homes are turning huge profits in only just months. So there's many stories nationally where buyers have bought a property and sort of flipped it within about 6 months and made huge profit. Now, interestingly enough to know, the largest recorded profit was for a property purchased off the plan. The buyer never really settled on it. He nominated before settlement and made a cool $500,000. That's in just under 6 months. Yeah.
That's more commission than you write in a quarter. So that'd be a pretty good outcome to have.
Sure.
All right, give us two more.
Thank you. $1 million suburbs. It used to be a badge of honor to have a suburb with a median price of $1 million. Right now, we're seeing suburbs with median prices of $3 million. And those suburbs doubled during lockdown. And the experts saying they will double again in 2021 to reach just over 60. So when you're seeing the median price grow so much.
So there's 60 suburbs there that have got more than $1 million as their median price.
More than $3 million as a median price.
Oh. I'm living in the wrong place.
You got to move out my way.
All right, give us one more.
Two more. Let me squeeze two more. I'll do it very quick. Now, we seem to be able to get less bang for our dollar in traditionally cheaper known cities in Australia. For example, in Adelaide, which was one of the most affordable capitals in Australia, we've seen house increase in the last 12 months, going from $450,000 up to $509,000. We are currently seeing in Adelaide houses, properties selling at auction more than $500,000 above their reserve. Hobart.
Everyone's making $500,000. The guy brought an apartment off the plan, turned $500,000. People in Adelaide are selling for $500,000 over the reserve.
Yeah, and Hobart, Australia's cheapest capital. We all know that. Houses increased by 8.7% the last 12 months. Hobart is no longer the cheapest. It's now higher than Adelaide, higher than Darwin, higher than Perth. So you can see even the places people used to say, it's good to invest over there. I know it's not the ideal place, but it's good value for money. No longer. And lastly, there's been quite a few stories lately where people seem to be camped out of the developers or at sites to purchase when it's released so they don't miss out. And recently, last week, we had a case where people had camped for 4 days and nights so they don't miss out.
I think if there ever was a sign of a boom market and rising prices, it's when you see people camping out to get in those lotteries. So yeah, okay. All right, Greg, I know you and I wanted to chat a little bit about the change in strata laws, particularly here in Victoria. Lucas stole all of our time. It's just past the top of the hour. So let's keep it short. In general, can you give people an overview? What exactly as a concept has changed without getting into the detail of the law? Or what's the intent of these changes?
Just generally, everything has to be more transparent. So you've got a point where ultimately, as an owner's corporation, you're getting better value. That's what the laws are really. If you want to do it that way, it's just stop rorting and getting better value. If you had to summarize it, no more rorting and better value.
So, we often hear stories of people being signed up by the initial developer or unscrupulous strata managers to overpriced contracts for extended periods of time. Yeah. And as you pointed out, to be getting a
so they can
paper
do
bag at some point.
They get the South African kickback.
Yes.
So,
can that still be done?
No, that's gone history. So it's the changes are good. Absolutely.
Yeah. All right. Well, I think that's it. We're out of time. Those of you that want to know more about that topic, check out last week's newsletter. Really, really good story written there by the Strata website, Flat Chat. The guy's name is Jimmy Thompson. He always does a great article. Ultimately, for those of you that do live in Strata, this is a good thing. And I think a lot of the other states will follow suit. There's still more to be done, but I think it's a step in the right direction. All right, as I said, those of you that have got to drop off, feel free to. I'm just going to quickly round out today with a few closing comments. Those of you that enjoyed this and got a lot of fun out today, I think it's really important to think about what do you do for the rest of 2021 and beyond. Path A is the common path everyone takes, and you've got two choices there. One, do nothing. Perhaps you enjoyed it. Perhaps you didn't even enjoy it. All I will say to you is that if you don't make a change, then don't expect there to be a different outcome. If you're happy with where you are, then great. What I really hope as a bare minimum is you take on board what we've chatted about, continue to build that database of your actionable knowledge, and make sure you take stock of where you are right now and capitalize on the opportunities that are here, because you've heard it from everyone. It doesn't really matter what we look at, prices are going up, and you don't want to be caught out having realized about 5 years down the track that you've missed out on significant capital growth over that period. Path B, this is what I really, really hope that all of you do, and I think it is the best way, is let us help you. Let us run you through what is going on. Let us see how we can work together and see if you're a good fit for us and we can help you on that path. So how do I recommend we do that? Look, there's a lot of ways that we can do it, but perhaps the most dedicated and active way is to get together one-on-one. So I've set aside some time in everyone's diaries over the next few days for you to book your own. It's free, it doesn't cost you anything, but about 15 to 20 minutes of your time. And really, it's a very, very simple process. Typically, what we'd do is we'd have a quick chat about the market, where things are. We'd talk about what you've been up to, the kind of services that we can offer or how we might be able to help and whether you're a good fit for us. We'll talk about what your future plans are, what you're hoping to do, and really see if that fits in and we can add some value to you. If you don't want to meet face-to-face, we can do it over Zoom, we can do it over the phone, whatever suits you best. Really just a quick introduction and to work out if we're a good fit for you and you're a good fit for us. If you got value from today, then definitely I think this is the great next step. If you're unsure who it might be and what it is, if you're on the call today, it's for you. Typically we always say that it's for those of you that you may not be a beginner, maybe you are, maybe you're not, but you know that there's more to get down to, there's more you could be doing, and you want that little bit of a push to get there. We obviously need you to be motivated and able to actually take that action. We'll push you as much as we can, but we need you to actually roll up your sleeves, get involved, get to work, and make sure that we take stock of where we are and actually set yourselves up for the future. So how do you do it? There should be a link in the chat. Click on that, book it now. There should be on the link that you went through on your browser page, should have redirected to that booking page. Those of you that don't have your diary or have got to duck off, we'll send you a follow-up email with the link to book your session. That is it. That is the end of today. As I said, it will be short, it will be sharp. It is about 7 minutes past 3. So we've run just over. If you do have more questions, we'll hang around. So for those of you that are going now, this was question time on the 17th of March, 2021. I very, very much appreciate all of you setting aside some time. I know how busy everyone is. And I really hope that we see you again. Whether it's next week, next month, or later in the year, we do this, rain, hail, or shine, every single Wednesday at 2:30, no matter what goes on. So please do join us again. Those of you that are going, thank you very much and look forward to seeing you again next week.